Hello everybody, this is cryptocurrency news, BitSeven Digest Weekly. Pantera Capital raised $160 million and told about the bottom of Bitcoin price. Venture capital firm Pantera Capital, leading in the cryptocurrency industry, raised $160 million for the investment project Venture Fund 3. And so the company did not reach the goal of $175 million, but decided to stop raising funds until the end of the month. Note that Venture Fund 3 has already made investments in 11 portfolio companies for a total of $38 million. Under the new fund, Pantera Capital intends to realize 35 transactions with an average value of $3.5 million. On average, the firm's share in each of the projects should make up 11%. It is worth mentioning that the two deals were a natural continuation of the previous ones. The company has invested in players in the following market segments: finance, payments, stock exchanges, private blockchain solutions, and infrastructure. Pantera Capital is actively investing in trading platforms, since in the past these investments have been paying off well. Note that the company participated in the $182 million backed financing round together with Microsoft, the Boston Consulting Group, and others. Also, representatives of the venture capital firm recognized that in the past, some correlation between the price of Bitcoin and the approaching date of the halving took place. So, in 2012, the bottom was reached 376 days before the event, and in 2016, 320 days. Thus, if you take the average date, then this time the first cryptocurrency can reach a minimum on June 10th, 348 days before the reward for the block decreases, the company believes. Let's recall one of the latest investments of Pantera Capital has been a cryptocurrency broker, Tagomi. Next in cryptocurrency news for this week. Hotel and chain car dealership for VIPs will start accepting Bitcoin and Ethereum. Starting from May, visitors of the 5-star Hotel Dollar in Zurich and customers of the Castle automotive chain in Italy and Zug, Switzerland, will be able to pay for services and goods in BTC and ETH. This reported by the local news publication Finews. Crypto payments will be made through the INAPay mobile application developed by iNectar blockchain startup with the support of Swiss financial platform Baidu. Payment will be made at the current exchange rate of the Swiss franc. In addition, Dollar and Castle are committed to comply with the requirements of the regulator to prevent money laundering. Let's recall that in February, the largest private bank in Switzerland, Julius Baer, announced that it will soon begin to provide its customers with new and diverse services in the field of digital assets. Every new day, we receive news for some other way of distributed ledger technology application. There are so many cases at this point. Just some examples: IBM shipping tangerines for Lunar New Year, going to cinema in Brazil, metro ticket payments in Argentina, and for other hotels reservations in Dubai. It might seem like these are small things, but the more publicity and recognition blockchain gets, the closer we will be for future mass adoption of cryptocurrency. Regulations is one of the cornerstone problems in the crypto space, and many cryptocurrency news emerge from there. The CFTC Advisory Committee discussed the issues of crypto regulation and DLT adoption. The CFTC Council discussed the regulation of crypto industry and the adoption of the DLT at the latest meeting. Participants of the event heard various reports on the digital currencies and distributed registry technology. The first speaker was Peter van Valkenburg, head of research at the Coin Center, who spoke about the various mechanisms of consensus. Continuing the theme, CFTC Commissioner Brian Quintens said that in this plan, Ethereum's work on the transition from POW to POS raises important regulatory issues, including the possibility of manipulating or falsifying blockchain. Another report was presented by members of the American Bar Association Working Group. Catherine Turkula and Charlie Mills reviewed the current state of blockchain and crypto industry regulation in the United States, Malta, Switzerland, etc. At the meeting, we considered specific areas in which the management of the CFTC can contribute to the development of DLT. The participants also discussed the report of the International Swaps and Derivatives Association (ISDA) about the recent release of the Common Domain 2.0 model for credit derivatives, and etc. The report discussed the possibility of digitalizing financial transactions and automating trade processes, since DLT is becoming increasingly relevant. Lately, there are more and more cryptocurrency news about payment giants and major banks having their sites on blockchain. Capital of institutionals is just on the verge of entering crypto industry. And now, Wells Fargo and MasterCard blockchain has to prove the hype around it. There is no doubt that at this point, the blockchain has so much to offer, but its use in business has not yet been fully proven. This opinion was expressed by CEO of two payment giants, Wells Fargo and MasterCard, that are actively trying out blockchain in different ways as part of the event dedicated to fintech. Fundamental technologies are very interesting, but they unfold very slowly, explained Tim Sloan during his speech describing blockchain. As an example of implementation of this technology, Sloan mentioned a pilot project that is being developed by his American bank together with the Commonwealth Bank in Australia, using blockchain for trading operations. Ajaypal Benga, General Director at MasterCard, which ranks third in the number of patents, 111, for development in blockchain field, also expressed doubts about the revolutionary nature of blockchain. I think blockchain may be an attractive thing, but specific business model has yet to be proven. There's a need for a lot of improvements and changes in DLT over time, asserted the head of MasterCard. Nevertheless, MasterCard continues to invest in blockchain. The company is considering its potential for improving supply chains and counterfeit problems. Let's recall that recently similar opinion was expressed by the head of Bank of America, that is leading for a number of patents in blockchain sphere among financial institutions. Study: most cryptocurrency exchanges do not meet the requirements of KYC. Analytical company CoinFirm conducted a study of the identity standards of clients of cryptocurrency exchanges. As it turned out, most platforms do not meet the requirements of regulators. The researchers analyzed the identification procedures (KYC) of 216 cryptocurrency exchanges. 69% of them did not have complete and transparent standards, and only 26% had a high level of anti-money laundering (AML). As the head of CoinFirm, Pavel Kuskovsky, noted, many see anonymous trading as a positive aspect of the cryptocurrency market, but on the other hand, this leads to difficulties for the business and an increase in the risks of criminal or terrorist activities. Interestingly, according to an analyst firm, the Binance cryptocurrency exchange carries high risks for regulators, as it allows anonymous trading. For deposits and withdrawals of less than 2 BTC, about $8,000, on the platform, no identification is required. According to CoinFirm, North American exchanges CoinSquare, Coinbase, Gemini, and Poloniex are more reliable because they have official regulator licenses and strict policies regarding KYC and AML. Kuskovsky noted that Binance does not pay too much attention to the prohibition of trading in cryptocurrencies among the citizens of those countries where it is prohibited by law. Such users, for example, using the VPN service, can hide their location and the platform will give them access to trade. Next up in cryptocurrency news digest. OKX admitted overestimation of trading volumes. Lennox Lai, head of crypto exchange OKX on financial markets, acknowledged that not all transactions that are executed on his trading platform make economic sense. This raises the problem of overstating trading volumes. According to a recent report by Bitwise, 95% of transactions in the Bitcoin market are rigged. Lai noted that those participants who wanted to cheat while trading are to blame. Thus, they are trying to get the most favorable conditions for commissions. But OKX still has a lot of suspicious trading activity. Lai said that OKX does not engage in fictitious trading, which is necessary to overstate the volume of transactions. However, it does not really prove anything. Some traders making many trades in non-liquid pairs raise the level of their accounts on the exchange. After that, the commission for them decreases. In order to gain the required volume, it takes time. Most often, this method uses traders from China. To end this cryptocurrency news week, we will talk about Bitmain. Investors file a group action against Bitmain. User BTC King 555, a critic of the mining giant Bitmain, posted a tweet in which he wrote that a group of investors was preparing another class action lawsuit against the company. The report says that investors are going to file a class action lawsuit in Hong Kong. They are seeking to recover their investments after the expiration of the Bitmain initial public offering (IPO). Back in August, I warned many investors to refrain from investing. Good luck in returning money to those who did not listen to me. I heard that collective suits are being prepared in Hong Kong. BTC King 555 believes that the $700 million Bitmain received last summer saved the company from bankruptcy. Investors in turn expected that the value of shares will increase significantly, which did not happen. Now, no one will invest in Bitmain. Everyone will be waiting for litigation with investors trying to get their money back. If it were not for the $700 million fundraising, Bitmain would go bankrupt right now. Jihan and CFO lied about numbers and misled investors. It is known that after submitting the application, Bitmain for placing its IPO on the Hong Kong Stock Exchange, more than 6 months passed. According to the HKX listing rules, if the application has expired without a hearing in the committee, it is considered no longer relevant. For the first time, Bitmain announced its plans to hold an IPO in the summer of 2018, and later in August, it was reported that Bitmain had allegedly closed an IPO financing transaction with the estimated value of $15 billion. It was assumed that both the Chinese technological conglomerate Tencent and the Japanese SoftBank participated in the process. Tencent refrained from official confirmation or denial. Other alleged investors also distanced themselves from rumors of participation. Now even Bitmain was accused of having a bad record, and it had yet to comment on this matter. On this note, new but already established and acknowledged platform BitSeven is a very bright prospect to start trading and gain profit. So, if you want to make money with crypto trading, join BitSeven.com. Link is below. Subscribe to our channel and like our video.